Hello, everyone. This is Michael Zuber with One Rental at a Time, which is a brand I love. So he comes with a lot of experience, and I really like listening to guys like him because he talks about experiencing different markets, essentially. And so his opinions are come from experience and seeing people lose, seeing people win. So glad to have you
Yeah.
here.
Thank you for having me, Spencer. It should be a lot of fun.
Yeah, for sure. So let's start with what are your thoughts on the current market right now in 2019?
Oh, I love just jumping right in. So I think there's two different markets, and I say this again from somebody who's been doing this for nearly 20 years. Um, I think there's something in real estate investing for whatever reasons. There are these herd mentalities, right? Real estate investing goes from the sexiest thing in the world to the thing to be avoided back to the sexiest thing, right? And if you go back and you look at, '05, '06, '07, what was sexy? It was single family homes. And I say that because you can go back and look this up. There were people buying brand new construction homes when they were dirt lots and flipping the contract three times before the house was built, and everybody made 20 grand, right?
Wow.
So people thought it was easy and everybody was coming, right? I remember cocktail parties and it just everybody was talking about this and that and this and that. And frankly, as someone who started in '03, where I bought a house for 107, and then, we had got to like seven houses and we were trying to buy the next one and they were now 270. It's like, how can this make sense? The rent
Yeah.
never moved. It just didn't make mathematical sense. So that's what we were in at that time. Why do I bring this up? Because manias often rhyme, but they're never the same, or at least they're not the same the next time. So what do we have in 2019? First off, we don't have a single family home mania. Interest rates are low. We have fixed rate debt. Lending is real. The lending standards back in '07, '08 were fake. And they've done a great job to make sure that single family homes won't crash our economy. That said, we have the Grant Cardones of the world who have been preaching bigger is better, flashing their jets and Rolexes and Bentleys or whatever the hell they are, and people think it's easy. So we have a mania today in multifamily. For the first time in my career, bigger is not better. And to be clear, what I mean by better is I want to know what's going to produce the best yield on my cash. I am sorry, in most markets, multifamilies are overpriced. And in some markets, they are vastly overpriced. I know this because I've been doing this a long time, and I've been running the same calculations for more than a decade to compare deals. And today, in my market of Fresno, California, which is the only one I know with any certainty, a single family home is a better price, is a better yield. It just is. I've sold, and I put my money where my mouth is. I've sold apartment buildings in this mania. Just like in '07, I sold my houses. If you want to overpay for something, I am happy to let you overpay. I'll just move my equity via 1031 exchange to something better. So I hate manias. They scare me. The herd is dangerous. People are going to get crushed. I saw people go bankrupt last time that were worth 10 million bucks. It's a sad affair, but it's not going to happen to me.
Now, I imagine with living in California, kind of Northern
Mhm.
California, it's known that it is most expensive there within
Yep.
America. Do you think that clouds your judgment? And I don't mean that in like a negative way, but do you think seeing all these really low cap rates and all that, do you think that clouds your judgment as a market as a whole? Or are you also looking in other markets that are considered to be kind of the cheap ones or the ones with great returns? Is that still
That's
equally
yeah. I mean,
valid?
I'm certainly biased. I mean, there's no
Yeah.
question. You can't be in a market, right? So I've lived in the Bay Area, that expensive market you're talking
Hmm.
about, my entire life. I don't invest here, so let's be clear. I do believe in live where you want, but invest where it makes sense.
Hmm.
Um, so I chose a market 2.5 hours away from me by car. So I don't invest in my backyard. I tried, it didn't work. Right? Nothing works. Um, so yeah, I think there's certainly some biases. I do know, and I watch Facebook and Bigger Pockets and all these things that people are talking about the Midwest and Detroit and Cleveland, and Texas was really hot 6 years ago. And all I got to tell you is go back and look at what happens when unemployment doubles.
Hmm.
Right? You're in Cincinnati, for example.
Yes.
Go back and research what happened when Cincinnati's employment rate was double. And I say that because I've done this enough and talked to enough people over the years where my network is decent. I have people in other markets that call me up now laughing at California investors. Those guys are overpaying. They,
Really?
these houses have never gone for more than 50 grand, and that stupid idiot paid 75.
Wow.
Yeah, it looks cute because they have their California bias on it, but they've come in and, sure, maybe they'll move somebody in now, but that neighborhood sucks. It's below this line, and it's people are not investing enough time. They don't know the market. The number one thing I teach people is learn your freaking market, and you can't do that from Google, Street View, and Zillow. Um, if you're going to put your money somewhere, get off your ass and go there.
Agreed. Yeah, the California investors have been coming to Vegas in flocks, and we've
Oh,
seen
for
the
sure.
housing here is gone up a lot. And this actually goes into something I was curious on your opinion. So right now here in Vegas, we're seeing a purchase price. Let's just call the average purchase price of a single family home at 340,000.
Okay.
Over the last 7 years, there are many metrics showing that the average income
Hmm.
of these workers has not increased. So is that a way that you measure a market as being kind of near the top, where you're seeing this,
Oh,
at some point, when can people not afford the houses? It's got to happen
there you
soon,
go.
right?
So the thing that you're going to love in this book is I
Mm-hmm.
talk about something called the Affordability Index.
Mm-hmm.
And that is exactly essentially what you're looking at. And I use that to produce a green, yellow, a red flag for my market. So what is an affordability index? It basically indicates what percentage of the average person can afford the average house in a local market, right? You could look up Vegas's affordability index if you wanted. So my numbers in my market, right? Fresno, for example, when Fresno gets below 20%, so 1 in 5 people, I consider that a yellow flag. When
Okay.
it gets below 15, it's a red flag. So what does that mean? Yellow flag means I stop looking, right? It's like cautionary, too expensive, things are getting ahead of itself. 15, I actively look at selling, right?
Okay.
So
Good
let's
to know.
let's tie this together, right? So back in 07, 08, when this really jumped out at me, it got as low as 14. So I sold, quote unquote sold, I did 1031 exchanges. I said, okay, if you idiots want to overpay for housing, I'm going to take the equity and buy small multifamilies because they were not overpriced. Today it's at 42 or 41. So plenty safe in my market. San Francisco is a 9. So if I owned
Wow.
anything there, I'd be selling. I just sold months ago, right?
Right.
That's just how this happens is markets will get ahead of themselves. People are overpaid. The Silicon Valley has this stupid stock market wealth that comes in waves that I believe is now crashing and subsiding. So there will be people that bought housing in the last 2 years. They're going to lose their ass.
Mm-hmm.
And it's going to be sad, right? There will be people that had hundreds of thousands of dollars because of some one-time life event stock company going public that betted on some Palo Alto or Mountain View home that in 3 years they're going to lose. They're going to sell it as a short sale. It's just going to happen. It's unaffordable. It's a big metric I watch.
So for your business right now, let's just hypothetically say that there is a recession coming at some point. Let's just say in the next 2 or 3 years or whatever.
Mhm.
How do you believe you have your business set up so that you're comfortable with that happening and you're not afraid of losing?
So first off, I do believe a recession is coming. So I've been actively preparing for this. So what did I do? First off, I went in and looked at my what I thought was overpriced, which were some apartments. So I sold off 2 apartment buildings because people wanted to overpay, and I took that cash. I've used that in this example because of how I had my tax structure set up. I actually took the cash via during an exchange.
Mm-hmm.
Um, so I left that money basically in a reserve account because I think there'll be better deals coming. So I raised my cash balance. Second, I repositioned debt. I had some debt during some private money debt that was 10%, that I could go out and refi. I had it for 6 years that I paid because I bought them at the bottom. It was too much paperwork to refi. I was like, I don't care. Right. But
It
now I've
feels
gone
really good
through.
if you're paying 10% and you're not immediately refined.
Yeah, no, I did. I mean, let's just talk about it. I bought 8 houses below 50 grand in
Wow.
Fresno during 2010, the absolute worst of the crash, that
Mm-hmm.
rented for over $1,000. So forget the
Wow.
1% rule is a 2%, right? So I didn't really care, right? I was paying $210 or whatever it was on the mortgage or whatever it was. It didn't matter, right? I was always about the next deal because I had a full-time job, right? I worked
Mm-hmm.
60, 80 hours a week. I didn't, last thing I wanted to do was go fill out a, application to replace a 50K loan. Plus, not many banks wanted to replace a 50K loan, given all the
Right.
Dodd-Frank and all that nonsense, right? So now just recently we refied all of that. So we don't have any more 10% loans. So we've lowered our cost basis. We've actually taken equity and repositioned debt, right? So took we took we laddered up, so we went from a 30% LTV to a 60% LTV on fourplexes. We paid off some houses, so we're basically creating little piles. So if God forbid the worst came to worst and we had to let stuff go, we have a whole collection of stuff that's free and clear that the banks can't get. We've laddered up stuff that we think is safe, but again, worst comes to worst, we have this little pile that will take care of us the rest of our lives. That's free and clear. So as long as we can pay the property taxes and insurance, we're good, which is pretty easy to do. So that's what we did on purpose, because I think a recession is coming. And then what I'm doing is I'm adding another trick. I believe the most profitable business, kind of like 2020 to 2022, is going to be subject to,
Mm-hmm.
right, a form of seller financing, because there's going to be a lot of sellers that are upside down, but they have great interest rates, and
Oh, I see. Yeah.
right, they're going to be 3-4% terms. So I'm gonna start learning about subject to, and I'm gonna do subject to lease options or whatever. So I'm adding more tricks to my bag because I see what's coming, and I think multifamily is going to get hammered, but that's probably 5 years out, because they have different reset periods and the like, and extend and pretend and those kinds of things. So I'm actively adjusting my business because I think it's coming.
Yeah. Now you say hammered. So a lot of people are getting in this mania to buy in multifamily. A friend and I actually started a meetup out here in Vegas. It's
Hmm.
gotten to about 100 members. We have a lot of people show up once a month.
Hmm.
And there are a few people that have come in and really like this idea of syndication. And it's a very big buzzword on Bigger Pockets, all these beginners.
Yeah,
I want to, and it kind of goes into your opinions on the vanity metrics. You know, they want to be a
yeah,
part of a 100 unit because that's superior to owning one unit, right?
yep.
When you say hammered, what do you what do you think's going not necessarily what do you think's going to happen, but what really do you mean by getting hammered, and how can
All
people
right.
lose in multifamily because it's such a hot
Let's take a
investment right now?
syndication. I am so passionate about this because I'm trying to protect people. I believe anybody getting into a syndication today as an LP, limited partner, meaning the money side,
Hmm.
I believe there's a better than 50-50 chance the following story will be you in 5 years. Okay. So you come into a syndication, you throw in 50 grand, 100 grand, whatever it is, into some 250 unit building in some city in some state.
Hmm.
Why did you do that? Well, this syndicator has had 5 years of success. They've done 3, 4, 8, 10, 12 deals over the last 5 years. Guess what? Not normal, but okay. Because the last 5 years have been awesome. Any idiot can make money the last 5 years. Then what happens is you were offered a preferred return. So the first thing, let's say it's 6%. So you get your preferred return the first quarter, then the second quarter, and then it goes from 6 to 4, then it goes from 4 to 1, and then it's 0. So pretty soon you're getting no income off your equity position because you're equity, you're not debt in a syndication. Next thing that could happen is you could have a capital raise because these people now are running a 250 unit building in some city and some state having horrible turnover, evictions and vacancies and all of that. And I'm a landlord that owns apartments, and I know that it's not occupancy, it's turnover that kills you.
Hmm.
So turnover is happening, right? Uh, then, so you may or may not have a capital raise. And then what's going to happen is you're going to get to your 5 year period where you finally think you're going to get your money back, and they're not going to be able to sell. Or they're going to be able to sell, but as an equity person, you have to take a haircut. So you gave them 50, you're going to get back 32 or 18 or freaking 0
Yeah, years later too, so you lose that time
years
value of
later.
money.
Oh, it's going to be horrible. Now, it won't happen to everybody. Some deals will work because some cities are okay. Um, but there are too many people getting into syndications today. And frankly, I think some syndicators are going to go to jail because
Oh,
if they've
wow.
had 5 or 6 successes, what are they likely to do? They're likely on their 7th raise. They're going to take money from their 8th raise and pay their 7th raise so their numbers still look good. And once you do that, it's a Ponzi scheme and you're going to jail. But
There's
this is
probably
5 years
greater
out.
than zero people out there that will happen to.
Oh, it's more than 0. Oh,
Yeah.
but unfortunately, nobody will find it for 3 to 5 years. But this is a video that will be up, and 3 to 5 years, somebody come back and go, "Yep, he nailed that one. Didn't see that one coming."
Now you mentioned one of the fears is not being able to sell, and I think that's the key that I've learned with talking to experienced individuals, whether investors or not, who have been through recessions. And you know, you can flip a house, or you can say, hey, this property is really worth $200,000, or in your case, a multifamily, let's just call it 20
Yeah.
million, whatever.
Yeah.
The
Whatever. Yeah.
key is it might be worth that, but I've heard, and this is going to be my first one, but during recessions, lending constricts,
Oh,
and it might be worth 200, but if no one can get lending on 200,000, it's only worth what people can get lending on. So
yes.
so what you're saying, getting hammered, it sounds like, you know, sure, the numbers might indicate it's worth $2 million, but if no one can get the lending only at
Mhm.
1,400,000, well,
Yeah.
that's what you have to sell at. Is that kind of in line with what you're thinking?
100%. What people don't realize, again, the last 5 years are abnormal. So think about this. And let's just go back to reality because this happened to me. So 2008 happens. We are in multifamilies, right? So we have 80 units at this time, roughly. I think, yeah, 80 units. And we're cash flowing better than we ever have. We both have, my wife and I both have 6-figure jobs. We have 7-figure net worths. We have 800 credit scores. And we own 80 units and we never lost a thing.
On
Sound
paper,
pretty
you're
good, right?
perfect.
Sounds good, right?
Hmm.
We walk into a bank to buy a house that was a short sale, and they didn't actually laugh us out of the room, but it felt that way. They're like, no, we won't lend to you because you own too much real estate.
Wow.
There was a time where if you own more than 4 rentals, no bank would lend to you. So I have been in an environment where 800 credit score, 6-figure job, 7-figure net worth, 800 credit score, never lost a thing, can't get loans. It'll
That's
happen again.
scary. And that's why I'm getting fearful. I'm very thankful for my current experience with these flips and kind of seeing what can go wrong. And just the sales, this is my first sales process of a flip. And it's not what it's worth, is what are people willing to pay, and can they get lending on it? And that's my
Yep.
big fear with a lot of flippers now. And I was really ignorant. If these two had gone well, I was probably going to go out and over leverage myself again. And
Oh,
now I'm seeing that I think a lot of people have done one or two flips successfully and are getting to the point where it's like, man, I can do two or three at a time. And the
yeah.
problem is, what happens when those are ready, but people can't get lending to purchase them? You're stuck.
Yeah, I know a couple of Bay Area flippers that are like you are actually they started maybe a year or two before you. So they had a couple of home runs. And in the Bay Area, your home runs are 6 figures. I
Yeah, I've
mean,
heard.
like big money, right? So I've known a couple of individuals that had a couple of home runs. One guy made like 350 grand on a flip. You get a pretty big ego doing that, right? You make
100%, especially if it's in your first
350
year or two.
6 months. You're like, shit, I'm Warren Buffett of real estate, right?
Hmm.
Unfortunately, they did what you thought they would. If one is good, more is better. So they signed up for two. Um, Neither have sold. They're now upside down. Their hard money costs are $22,000 a month.
Oh my gosh.
Their 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 um their 350 grand profit is already gone, and I my guess is if they don't sell in the next month, they're going to lose them. And I told them that you better be prepared to lose them because I don't think anybody's going to buy them. I think the market has fundamentally changed, and I think you screwed yourself. It's a lesson to learn.
Yeah. Now, as far as I know, you never got caught and got your tail handed to you. So it sounds like
Well,
you kind of always had long-term view in mind. Is that correct? Even in
always.
'03, always.
Yeah, well, yeah. Again, right. So my story starts as a rich dad, poor dad on my 30th birthday. It's like I can't do this forever. My whole plan was just to buy one, and then one worked, and we bought another and another. And I didn't really have any master plan. I was a full-time employee who loved his job. And
Uh,
then life happens, and we did 1031 exchanges. The crash happens. We bought a bunch of stuff, and I got to be 45 and decided I didn't want to work anymore. So
And you say we, was that you and your wife starting
yep,
at 30 years old? Okay, so
yep,
what your situation, you started with, you enjoyed your job, and
yep.
you didn't have that ego of needing to flash on Instagram to get the young
Didn't
women.
even I didn't even have an Instagram account until
Yeah,
I retired. But
yeah, I'm
Jesus,
trying to relate it to today's
yeah,
game, because I think a lot of people enter this, and this is, I don't want to say a flaw of the industry, but if you're someone out there with a YouTube and an Instagram, I think it's very sexy to post on like
to
the marketing
flex.
angle of this. Yeah,
Yeah,
and be like, hey, if you want to quit your job because you hate your job, if you want to make 100 grand a year, just sign up for my course. And it's becoming very buzzwordy. Hear all these buzzwords: 10K a month, 100K a year, quit your job because you hate it. And I think
yeah.
a lot of people in 2019 don't necessarily hate their job, but they're becoming aware of all the possibilities of what could happen if they leave their job. And I think it's
Hmm.
creating a lot of anxiety. And I'm part of that. My job, I have no complaints. I don't make much money, but I have a nice job. It's very stable. They treat me well, all this good stuff. And
Yeah.
I found myself, if you stay on, I don't have Instagram for this reason, the Snapchats, the Instagrams, if you see the life others are living, it kind of makes you feel like you're missing out. And I think it creates that, it kind of helps you jump into the mania of
Yeah.
real estate investing. And it sounds like you never had to deal with that. I think enjoying your job and being married at the time, you probably didn't experience what a lot of people are, some young single dudes are
Well,
experiencing right
no,
now.
no, well, yeah, yeah, I was a married guy when I started, so yeah. But again, some of the one of the things that we did very early is, first off, we spent every penny we made until I was 30, right? And I was making six figures a year. But you're flashing, you're doing stupid stuff. Rich Dad Poor Dad changed my life. We went from spending 100% of our income to spending 50% of our income. So we're very
Wow.
conservative.
Hmm.
We live below our means. But again, the only reason we were able to retire is we sacrificed consistently for 15 years. We
Wow.
got very specific on needs versus wants. We didn't take care of any of our wants for 15 years. Um,
That's long-term view.
yeah, it's just that we knew we wanted to get out, and we didn't know how long it would take. I mean, damn, 15 years is a long time. But I remember one car ride back from like our seventh or eighth housewarming party, right? Some peer group of mine bought this new house in this new area. It's really nice and all remodeled. And, we're living in some little small condo, and my wife's crying on the way home. Are we doing the right thing? We doing this? It's 8 or 9 years into our journey, and we're not really even seeing huge rewards yet. So, yeah, we kept our head down. We just kept moving forward.
Yeah. Now I see you've got a nice little following on YouTube that you've built up over time. Is there anything you're doing locally? Do you help out people locally, or do you run meetups or anything?
I do not run any meetups. I post daily content on YouTube, right? One rental at a time. I speak at any meetup I'm invited to. So yeah, if you want me to come out to Vegas someday, we can set that up. I just like helping people. I retired as a 45-year-old guy. The first couple of weeks were fun, and then I woke up going, I am bored off my ass. I don't know what the hell to do. So yeah, I wrote a book, created a channel. It's enough to keep me entertained. So yeah, helping people is fun.
Yeah. Could you see yourself getting into rehabs even at this point of the market?
I have actually. I needed to do something, so I've done 40 flips in the last 18 months.
You said
Uh,
40?
40, 41. Yeah, 41. Yep.
Wow. And sold them all, or you
Yep.
buying and holding?
Also, no,
Wow.
I've added I added 15 doors this year, so I'm still adding to our portfolio. But yeah, I've done some flips. I buy what's called slumlord properties that are just disgusting. I spend
Investor
40 to
special.
50 grand. Yeah, fix them up, and then I sell them to landlords. I have a lot of people that follow me that want to get a pride of ownership property.
Hmm.
So I've been lucky enough with my YouTube following to people go, hey, I'll take one, because people are too busy. So yeah, I've had some good success. Um, it keeps me busy.
Yeah. Now, I definitely think the moving forward into 2020, the seller financing is going to be the game. And I think a lot of more people are aware because the education channel is now available to everyone.
Hmm.
Since '08, I think a lot more people are aware of the opportunities presented to you as seller financing.
Oh
And I'm
yeah,
going to be fascinated to see if those, like those lease purchase, lease option subject to, you brought it up before, if
yeah,
that's going to be the way to get in. And maybe that's a way for you in expensive California market, is to get in
yeah,
subject to. You sounds like you have plenty of experience with rehab. You rehab it and then maybe even sell it, seller financing, to some of these people that follow you. So it's
yeah.
it's like a win-win-win.
Yeah. My life doesn't suck. My life's pretty good.
Now, what are you planning for 2020? What do you got on the table?
So for 2020, I've just opened an office actually in Fresno called The Hub, where I've stationed 7 other real estate entrepreneurs. They pay me a
Oh.
really small office rent. So I don't, basically my life now is being happy, i.e. Gary Vee's thing, right? Be
Mm-hmm.
happy, um, and not complicating my life. So I'll never have employees. I'll never do this direct mail stuff. But hey, if you want to partner with me and come into my office and give me first right of refusal on deals and stuff, let's do it. So that's a big deal for me in 2020. Educating folks is a big deal for me, because I think 2020 is going to be a great year to be an investor, because I think owner occupants are going to fall off. They're going to get scared. I think unemployment's going to go up. I think it's going to be a great time to buy discounted properties. So yeah, I think 2020 is going to be a great year for investors.
Yeah, you heard it here first.
Yeah,
That was a prediction.
yeah,
I think
absolutely.
so too. And you're absolutely right about education first. I spent 15 months educating myself before buying my first deal.
Awesome.
Yeah. All right. I think that's all I got. We could definitely
Very
do this
cool.
again. Hopefully, maybe someday maybe in 6 months, we'll have a few events to
No problem.
really spark a conversation. But this is
Let's do it.
awesome. So you've got a book available. Where can
Yep.
people find it?
On Amazon, self-published guy, one rental at a time. It's our story. So
Yeah.
it's not a how-to book. It's not, it's here's how we started and here's what we did and what we didn't do over 15 years. So I wrote it from the perspective of trying to help somebody understand if you're conservative, take one step forward, don't get cocky. You too can have financial independence. So
Cool.
that's the way I wrote it. It's pretty good.
And how can people find you on YouTube?
Just go to one rental at a time.
I think that's
YouTube.
easy enough.
Yep.
You got a nice little following. It's hard building a following on YouTube, man. I'm up to 382 subscribers today, and it's actually grown something like 70 subs in the last 28 days.
Nice.
But which for me, I'm very happy with. But it's just getting to multiple thousand. It's difficult.
Yeah, no, it takes a while. You'll get there.
Yeah, I
Keep
just
being
need
you, you'll be fine.
I need to get a hot girlfriend so we could do the catchy thumbnails. Come learn real estate investing while you have like a half naked chick in the thumbnail.
There
That
you
seems
go.
to be how you do
There you
it.
go. All righty, man.
Cool.
Take care of
Thanks so
yourself.
much.
Uh-huh.